Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, equity markets are now listening to the fear signals the bond markets have been sending recently. Overnight, there's been wild swings in markets. The bond squeeze deepened and spread to shorter-term US Treasuries. There's been a sharp sell-off in equities, and there is a continuing sharp rise in the US dollar. A risk-off sentiment grips investors. Not helping in the US was that the expected improvement in the jobless claim levels last week didn't eventuate. There are now still 3.2 million people on these benefits and still far above the pre-pandemic levels of below 2 million. And investors are looking ahead and seem to be worried that the second quarter 2021 growth spurt might be it for the other side of the V bounce back, and that the trajectory after that won't be so bullish. This comes as current data about consumer appetites for new personal debt is rising in the US. Demand for car loans, credit cards and personal loans were up 11% compared to the equivalent 2019 levels according to one credit score reporting service. And the Fed's own consumer credit data for May reverts its continuing strong rise, jumping sharply to a 10% rate and marking the fifth consecutive month of solid rises exceeding 5%. In Europe, the ECB changed little in their usual policy position, but they did approve a climate change action plan which has been seen as ambitious. Investors are unsure how this will change the financial landscape for them. And that uncertainty is elevated because the ECB delayed releasing its policy guidance. In China, the big story is all about how Beijing is cracking down on their tech giants, and hard. That crackdown is both on their growing financial power and their reach into social communications. In Australia, expectations are rising that new macroprudential restrictions will be introduced before the end of the year. APRA is currently using a soft touch approach, but harder limits look likely in the next few months. The US Treasury 10-year yield starts today down at 1.29%, and down another 2 basis points and extending its retreat. The price of gold is now just under $1,800 an ounce, which is down $3 from this time yesterday. And oil prices have stabilised overnight, up 50 cents a barrel. In the US, they're now just over $72 a barrel, while the international Brent price is now just over $73.50 a barrel. And the Kiwi dollar opens today just under 69.5 US cents and down almost 0.75% from this time yesterday. Against the Australian dollar, we're lower too at 93.5 Australian cents, and against the euro, we're sharply lower at 58.7 euro cents. That means our trade-weighted index starts today well down at 72.3 and an 80 basis point retreat. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.